All right. Happy Friday, everybody. Happy Friday, everybody. It is my favorite time of the week, my weekly wrap-up live stream when I get to talk to all you folks about everything that happened in markets this week. And it's been another heck of a week, guys. Second week of 2024 is now winding down. We're into our last hour of trading. And well, the story this week was just walking back all of the losses in stocks last week. And we're essentially right back where we started the year, where we left off at New Year's, right below, if not at, all-time highs in stocks. Best economy ever, right? Right? How come nobody ever nods and agrees when I say it's the best economy ever, right? The soft landing, we've stuck it. I mean, just last night, I was watching images of soft landings all over Yemen. I was watching bombs and missiles make soft landings. I don't think they felt very soft to the people on the receiving end, and I don't think it felt very soft to the people that were pushing the buttons. Must be because the economy is so good, right? We've got proxy wars in at least two parts of the world, proxy wars threatening to pop up in other parts of the world. We've got jobs reports that came out last week. Well, initially they were like, oh, yay, 216,000 jobs. And then we looked at it and we're like, no, this is terrible. 1.5 million full-time jobs lost, people getting second jobs, people getting jobs as gig workers or part-time jobs. The jobs report last week was terrible. Then we got CPI this week, and everybody was like, uh-oh, inflation looks sticky. But we looked at the CPI a little closer, and we said, well, actually, the CPI isn't really telling us what's going on in the economy, because half of the increase in the consumer price index was due to rents, which are not going up anymore. I know there's going to be people out there that said my rent went up last year. And yeah, we get that, but asking rents are falling. They're falling in almost every major market. Really, the Northeast and some parts of the Midwest is the only place where asking rents are still rising. They're falling everywhere else, and they're going to fall more. I've got a video coming out tomorrow with my buddy Travis from Real Estate Mindset. We were talking about multifamily residential that's about to hit the market, and there is a ton of it coming into the market. So rents are going to fall. The CPI, it was just wrong, but it was wrong in a different way. All last year, CPI was too low when we all knew inflation was much higher than the 8 or 9% they were giving us. Everybody was feeling 15% inflation last year, and we're still feeling it now, but it's for price increases that have already happened. Other things like insurance costs keep going up, although insurance is grotesquely understated in the CPI. Nobody really pays the percentage of income that the CPI math says it is. It's actually, insurance is a huge cost of the average middle class, if there's anything left of the middle class household's weekly budget between health, home, and auto insurance. It really eats into people's pockets. Then this morning we got PPI, and PPI says, well, the producer price index is barely going up. 1% year over year, actually negative month over month number. Energy costs are going down. Fuel costs are going down. Now, oil spiked today because, see, also bombs falling, missiles falling. But you know what? Oil gave back all of those gains today. Oil ended up closing, was it negative on the day, if not just barely positive? War breaking out in the Middle East and oil is down? What does that tell you about the demand situation in the economy? If bombs are flying in the Middle East and the price of oil is down. So it's the best economy ever. Stocks at all-time highs. It makes perfect sense. And if you don't see it, if you're not feeling it, if you don't understand how good you have it, well, clearly the problem is with you and not what you're being told in the press, right? That's what you're supposed to believe when these political people go up and make speeches, and when the financial experts who are seeing all the benefits of last year's inflation with feeling almost none of the hurt that comes along with it, they're telling you you've got it so good. The problem is your bad economic vibes. You just need to stop listening to YouTube, turn on CNBC, do whatever Jim Cramer tells you to do, and everything is going to be great, right? Oh, and we got the Bitcoin ETF finally approved. Definitely, maybe, I think, probably, I don't know. Did it, didn't it? It wasn't, then it wasn't, it is. I'm pretty sure this one's for real. Bitcoin ETF is approved. And the price of Bitcoin has gone to the moon? No. Price of Bitcoin went down. It sold off on the news. If only somebody had warned that there might be a selling of the news event associated with the Bitcoin ETF. It's not like we've been talking about that one for months. Well, that finally came and went. It was the non-event. And then today it was the unevent because, well, Bitcoin has taken a dive down a couple of grand today. So much for that big flow of institutional money. As we speculated here on this channel, that institutional money was already into Bitcoin. That was the rally that we watched last fall. And now that rally is starting to be given back. How much of that rally are we going to give back? I don't really know. Are we going to go all the way back to the 20s where we started back in October, November timeframe? Now, I can tell you, if we do go back to the 20s, I'll be buying a little bit because I think the halving coming up in May probably going to start that cycle all over again, because when the halving hits, Bitcoin miners still have to sell their Bitcoin to cover their electricity bills. But the problem is they don't have as much Bitcoin to sell. So they're not earning as much Bitcoin. So they need to sell more of the Bitcoin they already mined. And well, it puts selling pressure. And you end up with liquidity problems. Less Bitcoin, less new Bitcoin entering the market. Price goes up a little bit and buyers say, oh, look, FOMO. And well, this is a market that runs on pure FOMO. It's not something we do here on this channel. We do not chase all-time highs. So it's been a week, guys. There's a lot going on. We're going to talk about the leading economic index. I had a good talk with my buddy Chris over at Financial Prepper this week. Found some interesting stuff over there. There's some interesting things happening in trade. The Panama Canal is having problems. We're sitting here worrying about the Red Sea and ships having to sail all the way around Africa. Well, they're taking the train across Panama now. That's a big deal. Not a lot of people talking about that one. So global trade might be under a little bit of pressure, even more than it's already been. So much to talk about, so little time. Why don't we just shrink my big melon of a head and let's say hello to Mish and let's see what's going on in markets at the moment. Mish, how you doing today, brother?
I'm doing well. I keep bugging Jack. I keep sending him the food plates I'm getting just to make him feel better about himself.
Yes, my text messages from Mish look like an Instagram feed right now. What are we enjoying? First of all, where are we at the moment, Mish?
So I'm in a really small town called El Transito, Nicaragua. It's about 20 miles from the closest paved road. There are more dogs than people here, I think. So no paved roads here, and nobody speaks English.
El Transito. So for those of you who don't habla español, that means the Transito.
The transit. But yeah, it's a really nice little beach town. It's mostly surfers. You got like 3 or 4 or 5 hostels, shared living spaces, and about 3 or 4 or 5 restaurants, a couple fish markets, and that's about it. But the good thing is at 6:30 every morning, we can walk down the beach, hit up the fishermen that just came in from the overnight, and get something right out of the ocean.
Wow, fresh out of the water. It doesn't get any fresher than that.
Excellent. I sent a picture yesterday of the red snapper I cooked on the grill last night or 2 nights ago.
Now let me ask you: you're in a surf town in Central America, so any signs of Bitcoin tourism, vendors accepting Bitcoin, anything like that you're seeing?
So I did go through the El Salvador airport, so San Salvador. I saw nothing listed in Bitcoin. It was all dollars only. There was no sign saying, hey, if you want to pay with Bitcoin, this is how you do it. No one knew what the hell I was talking about. So I think it's an enclave only, and it's mostly in Max and Stacy's mind.
in Max's mind. Yeah. I know El Zanto was that town, the town that's dominated by surf tourism and Bitcoin tourism now. But the way they portray it, it's almost like the second you get off the plane in El Salvador, it's like Bitcoin accepted here in your face. Apparently, that is not really the case. It's interesting.
I looked all over that airport. The airport's only 20 gates long. It's still got a lot of shops in it, food and whatnot. And yeah, nothing. I looked hard.
And tell me again, what did you pay for lunch today? You sent me a picture. It looked pretty good. Fresh fish, some rice.
So I fresh fish, a fillet of fish, a cup of rice, salad, and a bunch of those plantains where they fry them and then they smash them and fry them again, which are the best in my opinion.
Oh,
that was $2.50 Cordoba, which comes out to I don't know, $6.
Wow. So less than a Big Mac for an actual real lunch cooked in a restaurant. Must be
My
nice.
three meals a day, I'm spending under $20 a day on food. I'm not sure
Wow.
you can do that at the grocery store.
Well, we're going to have to add that to the CPI index. Food way away from home is still very affordable. Yes.
I think you ought to come visit me here. I got an extra bed in my room.
Oh,
I'm sure Gigi wouldn't mind you hanging out here for a couple weeks, right?
yeah, she would be just terrified to be rid of me for a couple of days. Honestly, I think she'd be just heartbroken, just purely. Actually, she'd be driven nuts by the kids, but that's mostly it.
The desayuno here, the breakfast, it's like 3 eggs scrambled with onion and bell peppers and rice and beans and for like $4.
Now that's actually more than I pay for breakfast because I have fresh eggs from my ladies, my birds every morning. And I just ran to the feed mill in between live streams today. The price of chicken feed is way down from last year's numbers. A 50-pound bag of 18% layer pellets after the pickup discount was $10 and change. Here, I'll give you the numbers. I have my receipt here. It was $11.09 minus the 75, so $10.36 for a 50-pound bag of chicken food. Those were, at least at Tractor Supply, they were pushing $30 a bag last year. So the chicken feed is getting cheaper. But
your probably per egg is trying to catch it up now.
Say that again. I'm sorry.
Your per egg is probably getting down pretty low.
Yes, very much. Although the egg prices are down from some of the ridiculous numbers we saw last year as well.
So this place I'm at, they call it the Sun Slice Hotel. You got a kitchen, you got a pool out there. You're literally, 25 yards from the ocean. Here, hold on. Nice. Let me see if people can see this. I don't know if you can see that or not, but that's the ocean.
Here, let's make Mish a little bigger here so we can show that again. Oh, nice. Yeah, right there. You can throw a stone to it. Outstanding.
So, if you come to El Trencito, come to Sun Slice.
Outstanding. All right. A little bit of free promo for the Sun Slice and El Trencito. Let's take a look at what's going on in markets, though, as we enter our last few minutes of trading of the week. We've got the S&P is pretty much unchanged for the day, down 3, almost 4 points. Hasn't really been a lot of movement since the open. But let's take a look at the longer-term chart here because this is going back to about the middle of October. And, of course, here is that monster rip-your-face-off rally that came out of nowhere just because Bill Ackman covered his bond short. And you can see that red line there, guys. That is the prior all-time high in the S&P 500. We came up right before New Year's, and we just stopped right short of that all-time high. The first week of trading went straight down, and then this week straight back up right to that same point. And we're just like, no, I'm just not feeling that all-time high. Just a couple of points below it. Now, something I want to point out here on this long-term chart, as we've been watching number go up, check out here. We've got a nice big high in the RSI when the market just got crazy ahead of itself. We got another lower high in RSI, even though stocks made a higher high. And then down here where the RSI is right now, even though we're back to that same high, you notice we're having consistently lower highs in the relative strength index. That's known as a bearish RSI divergence as stocks go up, but the momentum indicator goes down. That shows this rally is almost out of steam. So they are going to need some kind of a bullish catalyst next week to maintain the current valuations or possibly go higher. What could that catalyst be? I mean, we get a lot of bank earnings next week. A lot of the smaller and regional banks are reporting, but that's going to be about it. There's no big Fed events or anything scheduled next week. So, stocks need something. They're going to need a jolt of caffeine or an adrenaline shot to maintain these valuations or move higher from this point. Otherwise, this rally stalls and down we go. Looking over at the Dow here, we're at 37,555, down 155 points or about 0.41% today. Initial sell-off on the opening bell. I guess that was off of PPI this morning. I'm not really sure what led to that Dow sell-off. Probably the bank earnings. Bank earnings were, I don't want to say they were terrible. They weren't terrible. JPM's earnings were actually pretty good, but there were some areas of concern, a lot of big one-time charges in all the different banks. And the interesting thing is every bank reported something different. One had high severance costs. Another one got hit by the LIBOR transition. Another one had a big hit related to a restructuring. They all had big hits related to the FDIC. But banks are a big way on the Dow today. Again, let's look at the long-term chart over that same time frame. They're going back to about the middle of October. And we got something similar here, guys. Rip your face off rally in stocks right up until the end of the year. We did actually make new all-time highs in the Dow, but now we've kind of stalled out. We dipped a little bit, and we've come back up right to about the same level. And stop me if you've heard this one before. As that's been happening, we've got that same picture in the RSI here. The Dow is running out of steam, unable to continue higher at these all-time highs. So again, barring some bullish catalyst, which I'm not saying there won't be one, there could be one, but without one, we're looking at stocks heading lower from here. And the NASDAQ currently down 11 points, 0.08%, essentially unchanged on the day. Looking at the long-term trend in the NASDAQ. Go ahead, Mish.
I was going to say, on the crashing of the market this morning, not crashing, but the downturn in the market this morning, I think it had two things. Remember, PPI, good news is bad news, right? Yep. So PPI was tanking a little, went down a little faster than they thought. So that would be the good news. But then you temper it with the bank earnings, and I think that overrode the PPI because the buildup in both the having to save up for people not paying their credit cards is a big, big deal, right? Because that'll take a bank down faster than anything else, people not paying their bills.
Yeah, and you know that is a great point, Mish, and it's something I missed in my commentary. There were a few big banks, virtually all of them posting higher provisions for credit losses. Wells Fargo specifically warning about commercial real estate and consumer credit card debt, both of those two. So that was a big. Well, I missed that one. I should have mentioned that when talking about the bank earnings. All this talk about how, interest rates heading lower could send asset prices higher, it could send bond prices higher. All of that is predicated on the debt getting paid back. If the debt doesn't get paid back, then it doesn't matter what the interest rate does, the bond will go to nothing. So we're kind of out of this situation where we were last March when the banks were failing. The regional banks, they were failing because of the rapid rise in interest rates, causing the price of the securities that they had bought to go down. And that resulted in a couple of failures, and it took on a life of its own, and emotion took over there. Now, interest rates have started to fall since late October. And as those interest rates have fallen, those securities that were hurting banks have gone back up in value. But now we've got a whole different problem to worry about, the concept or the worry of people not paying their bills. And, we're going to get into some data points pretty soon here that says that's a very real threat. And a couple of rate cuts may not be enough to save that. Now, back on the NASDAQ index here, again, we pretty much heard this one, but the NASDAQ has not yet made a new all-time high. The highs from late 2021 are still the all-time highs by a pretty decent margin, but the NASDAQ has had that same rip your face off rally since late October, and it did dip last week only to recover this week. Now, I would add this week's recovery in the NASDAQ, maybe a tell here, the NASDAQ did not recover to the high from the prior week. It only came up to slightly below that level. So the NASDAQ, even though NVIDIA bros email me every day saying, how's your CoreWeave thesis playing out? Because they're playing gotcha, which I promise those are not going to age well. But the NASDAQ is telegraphing a little bit of weakness here. And something else, again, you've got that RSI divergence. Look at the RSI heading the opposite direction as the stocks themselves. So the technicals are not looking great in the indexes right now. And before we get too much further, I want to say thank you very much to Mr. Dan Hedin. Thank you, Dan. He says, uranium, Dan loves uranium. I know. And Dan, uranium is a blind spot for the channel here, which you are doing a wonderful job of filling. He's saying uranium to the moon, with Kazatomprom saying they will produce 40% less than reported. Spot went over $100, averaged 6.5% today and 17% the last 2 weeks. Thanks for all the info, Jack. Well, Dan, as it happened, and I was thinking of you when I queued this one up, we're a little out of order today, but I just happened to have that article in the queue ready to talk about. World's biggest uranium miner warns of production shortfall. Kazatomprom says sulfuric acid shortages are impacting output. Now, I haven't had the time to really dig into the sulfuric acid shortage. That's the first I've ever heard. That's a very niche industrial product, but it's used in the refining of uranium or the mining of uranium, apparently. There might be a video in there. I've got to look what's going on with the sulfuric acid shortage. Is this related to global shipping? Is there some product that's used in the making of sulfuric acid that's in short supply, or maybe German industry shutting down is affecting the supply? I'm not really sure where this sulfuric acid shortage is coming from, but as Dan lays out here,
it is very, very bad for the environment to make. So it's probably getting shut down, right? And sulfuric acid is used in so much stuff.
Yeah, and it was certainly used a lot in Breaking Bad. If you ever need to make a biomass disappear in a 55-gallon drum, that's chemical disincorporation. Apparently, is what Mr. Walter White used it for.
When MythBusters did the thing, and they said they used a special sauce to make it go faster, all they used was hydrogen peroxide not at industrial grade, not medical grade, because all it does is it adds more oxygen molecules to the mixture and makes it react faster.
Interesting. It's the first scientific discussion on chemical disincorporation we've ever had in the history of this channel. Excellent. And right now it means higher uranium prices. And I hadn't seen that spot went over 100, Dan. I don't usually follow the uranium charts that closely. I did have this one from Trading Economics that shows, I think these are just weekly snapshots, though. These are not daily. That showed we were at 92.50. I guess that's the spot price last week. And, look at, these may be weekly snapshots, but look at what we've seen since last May. Uranium's just been on a tear. Can it go higher? I guess, yes, it can. But, again, I try not to chase parabolic moves here on this channel. It looks like that move is already priced in here. But congratulations, Dan. I know you've done really well on your uranium portfolio. So hats off to you, sir. Congratulations, uranium bulls. And Dan says he'll teach a class for us on Wednesday. Okay. You're going to, on the Patreon call, you're going to do a master class on the uranium market. All right. Looking forward to that one, Dan. Now you're committed. You got to bring receipts. And JJ Watt, thank you, sir. He says oil prices are falling due to the stealth selling of the SPR. JJ, I don't think that's going on right now. I mean, the SPR, they're not really filling it. We've ordered, correct me on the number, Mish. What is it, 11 million barrels they bought back this year for the SPR?
Not even. So they bought $3 million or 3 million barrels in September. And this month they're buying 1 million barrels, so a total of 4. There were some mandated cuts or mandated selling that was supposed to happen this year, but the budget from 2022 into 2023 took all the mandated sales out, except for the 2023 sale. We sold another 25 million there over the year. So we do have a net loss last year because of the mandated sailings. Whoever came up with them, I don't remember who. I want to say that was Obama/Trump era.
I think it was Trump who started the mandatory selling of the SPR, or it started under Trump. I don't know who put it in the works. It could have been Obama on the way out, put it in the works, and then Trump implemented, but it happened under Trump. Mm-hmm. That was an annual thing that was separate from the massive dump that we had last year. But that still happened in 2023. Again, that was something that was set in motion a long time ago, but they have started buying it back. But let me just say, at the rate they're buying it back, do not hold your breath waiting for the SPR to fill up. Now, as far as stealth selling of the SPR, I'm not aware of any selling of the SPR going on right now. Is there some other way they might be hiding it? That's the first I've heard of that one. Honestly, I think the reason oil prices are falling is demand destruction. It's the only thing that could possibly explain this. I mean, look at this oil chart here, guys. This is terrible. First of all, we've been in this downtrend since September, but look at this candle here today. Look at the huge wick on that candle. I mean, we were up $4 a barrel at one point this morning on the news of the outbreak of war in the Middle East, which is known to drive fuel prices higher. And then look, we're down for the day, down a nickel versus where we started the day. So, if bombs and missiles flying doesn't send oil prices higher, what does that tell you about the demand market for oil? That tells you the demand is incredibly weak if the oil traders are looking at this and saying, no, I'm not buying here. Now, let me just throw in, we have now had one of the two escalations required to send oil prices parabolic. I've been saying it for a couple of weeks. At the state we were in with the Houthis attacking the tankers on a daily basis, we were two escalations away from a major supply disruption in oil. One would have been the United States retaliating against the Houthis. Check. We got that last night. The other one now would be the Iranians retaliating against the Americans for retaliating against the Houthis, who are retaliating against the Israelis, who is retaliating against Hamas, who is retaliating, blah, 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 all the way back to freaking Adam and Eve. We find great, new, innovative ways to kill each other. Maybe I should say Cain and Abel, not Adam and Eve. They got along well in the garden. It was Cain who started the whole thing. But regardless of who started it, we are now one major escalation away from a buku disruption in the supply of oil, and that would be should the Iranians decide to block the Strait of Hormuz.
Now, the good thing for us, though, is the oil dynamics are so much different now because we're pumping out 13 million barrels a day of oil, right? Not all oil is made the same, right? You have your sweet and you have your sour. Some are really good for making products, and that's what our oil is for. Ours is great for making plastic and a bunch of other stuff. We don't have the quote-unquote fuel oil that the Saudis have. Now, what the Saudis have done is they put ports on the Red Sea side. So it's a little different than the 70s, though it would still get a pretty big disruption for the rest of the world.
We are now one of the, if not the largest producer of oil in the world. We're still by far the largest consumer of oil, and we still consume more than we produce. But because of that shift since fracking and shale oil in the late aughts, the U.S. is a totally different energy situation now. Realistically, the U.S. could probably weather a blockage of the Strait of Hormuz a hell of a lot better than Europe could, because the U.S. has the domestic production. Europe doesn't have it. So Europe would just take it on the jaw if the Iranians decide to shut down that strait. I would also add that the U.S. Navy has performed exceptionally well in the Red Sea. Exceptionally well. All right. Now, I'm not trying to get political here, guys. And again, who started it? Who cares? People are dying. But the U.S. Navy has done a phenomenal, perfect job of intercepting everything that has been fired at its way. And then yesterday carried out multiple airstrikes, 60 different airstrikes or 75 strikes against 60 different targets without losing a plane or taking one hit to any one of our boats. And this is fourth-gen fighters we're talking about here, F-18s and E-18 Growlers. We have not even put our best planes in the air. So at the very least, the silver lining here is, despite what the propagandists will say, China has to be looking at what's going on in the Red Sea and rethinking the timeline for a move on Taiwan, especially because the stories I'm seeing about Chinese missiles being filled with water instead of fuel, and the corrupt officials who were overseeing the projects disappearing because of it. There's a purge going on in China's military of corruption right now. But at the very least, the one silver lining to this conflict is it has thus far been so one-sided, even though the U.S. has not been successful in restoring civilian shipping through the strait. The conflict, at least from a tactical point of view, has been so one-sided that China's got to be looking at that and thinking twice now. And this is me being optimistic, guys. I realize I suck at optimism. It's not really my strong suit. But the conflict that's been going on there, the U.S. Navy has done phenomenally well, despite an obvious lack of leadership. Let me just put it that way. Secretary of Defense disappearing without telling anyone. Thanks again. Hold on, let me bring it up. Thank you again, JJ. Appreciate the super chat and the support of the channel. We were going through markets, and then we got on to commodities. Let's talk about commodities while we're at it. Gold right now, February gold futures, $2,050. Had a great day, up $31, but we were up $50 earlier in the day. Gave away some of that, but still 1.5% in one day for gold. That's a pretty good day. March silver futures at $23.31, up 61 cents or 2.7%. Silver held on to more of its gains than gold did today, but also gave back some there. Platinum and palladium are ended up both down 0.5%. That's interesting considering what the other metals are doing today. We talked about oil already. February WTI futures at 72.76. They're showing up 74 cents. That's interesting because the U.S. oil chart, the WTI spot, is showing down a little bit. Something else I want to talk about on the commodities board real quick here, guys. U.S. corn down 1.77% today. U.S. soybeans down 0.75%. U.S. wheat down 1.2%. We got the WASDE report from the Department of Agriculture today. That's the World Agricultural Supply and Demand Estimates. It's a survey that the USDA puts out. And the stockpiles, the global stockpiles for wheat, soy, and corn all came in higher than expected. And we've had a lot of downward pressure on grain prices today. They were down a whole heck of a lot more than they are at the moment. Earlier in the day, they were all down about 2.5%. But we might be seeing a little bit of food deflation here. I don't want to get people excited, but all the futures are down and supplies are up. So the world food situation, despite the geopolitical mess we're in, that's actually looking a little bit better here. Although this is probably not very good news for farmers who are paying higher prices for fuel, but now the price of the row crops is going down. But that one stuck out at me a little bit today. Also, Bitcoin, guys, look at that big red candle in Bitcoin here, trading at 43,891 at the moment. Tried to warn that Bitcoin ETF approval was not going to be the bullish catalyst everybody was saying it was. Everybody was saying all this institutional money would flow in. Well, the ETF got approved, it went up, and right back down we go. Now, several $1,000s below where we started, still way up over the last few months or so. But guys, now that we have started this selling of the news, let's go back here and look. The first time we had one of those rumors about a Bitcoin ETF getting approved was all the way back here in October. And back then, Bitcoin wasn't even 30,000. And, we had all these false rumors of ETF approval and Bitcoin would go up. Oh, the story was fake, but it would hang on to the gains. That happened like almost on a biweekly basis. We would get some fake news story about the ETF getting approved. Bitcoin would rally, but then keep the gains when those stories were false. Now we finally got the approval and Bitcoin has started to sell off. Does that mean we're going all the way back down to the pre-ETF prices? I don't know. Heading into a halving, I doubt it, because I think you're going to have a lot of dip buyers. If there's one thing Bitcoiners like to do, it's buy them dips. But so far, this is a selling of the news event. Moving on to the U.S. dollar. U.S. dollar's had a pretty volatile day here. Starting out this morning, we had that PPI came in. The dollar started to weaken a little bit on a lower than expected PPI. Then around 10 o'clock, Neil Kashkari opened his mouth. I'm not sure specifically what Kashkari said, just that he was scheduled to talk at 10 o'clock. And, well, he must have said something hawkish because the dollar spiked when he did that. And now it's been floating around. Here we are up 12 basis points on the day. Looking over at the bond market here, bond market's been a little weird today too. Check out the difference in the move on yields here. 30-year is up 2 basis points at 4.202, but the 10-year is down 1 basis point, yielding 3.964, but the 2-year is down 11.5 basis points, 4.144 on the 2-year. Violent move in the 2, and it did the same thing yesterday. The 2-year is in free fall right now. It looks set to uninvert the 10, I guess, is where it's eventually heading here. Just 2 days in a row, really monster moves in the 2, and you don't really see it anywhere else in the curve. I mean, the 1 and the 3-year are along for the ride, but then you've got the bookends here. The 30-year, that yield is up 2 points, and even the 1 month is up 1 point. It's just the 2 in the middle is just taking this big dip. It's almost like this black hole, a quantum singularity has appeared right in the middle of the yield curve, and it is distorting space and time, dragging the yield down right there. Maybe it was the Large Hadron Collider. That's why the 2-year yield is falling so hard today. It's not why it's happening. But reverse repo down again. This chart has not updated, so I put my little bitty red line there just to complete the trend because the TradingView chart is a little slow. Reverse repo hit $603 billion today. That's another fall, a fall of about 23 billion versus yesterday. It fell 53 billion yesterday. So reverse repo has resumed its downward fall here and still remain slightly above trend, scheduled to run out sometime around March if something does not change here. So liquidity continues to dry up. Now, I would add, guys, as liquidity dries up, because in my opinion, someone's going to argue with this because people love to argue semantics, especially on Twitter. But in my opinion, as the reverse repo draws down, this is liquidity drying up, even though the net effect of reverse repo drawing down is liquidity positive because that money is leaving reverse repo and flowing into the bond market. But the total available liquidity is shrinking as the bond market drinks the Kool-Aid in the reverse repo, and there's just not that much left. So pretty soon it's going to go in there looking for more money, and it's going to be empty. And that's when something is going to have to change. My guess at that point, the Treasury starts to issue fewer bonds, and they start to spend down the Treasury general account. And I just want to say thank you also to Mr. Easy Fix. Yield uninversion approaching. It's all good, right? Well, I can tell you the yield curve usually uninverts because the Fed panics and lowers rates, which means when the yield curve uninverts, that is not good for stocks because, well, what made the Fed panic and start lowering rates? Usually something that tends to drag stock prices down. Will it be enough to drag stock prices down in this environment where good news or where bad news is good news and good news is good news and no news is good news? I don't know. Maybe it'll be enough to drag stocks lower, but for the moment, number go up. But yeah, the yield curve is uninverting. That is what we're watching with the 2 falling faster than the 10, right? The 10 should be higher than the 2. Go ahead, Mitch.
If you remember back, I don't know, about 6-8 weeks ago before this plunge started in the 10-year, we got down to only a 16 basis point inversion, right? So we are coming back to that. I think it's at 22 right now, if I remember correctly. So you typically within 6 to 12 months after the uninversion, things go bad, but that's always because they're, like you said, they're lowering rates. We're not doing that this time. So I think this kind of number system that we have about when everything's going to go to crap is going to be off a little because it is different this time. I hate to be cliche about that, but it is a little bit different this time because they're not lowering rates yet and the uninversion's happening.
Now, that's interesting. As of this snapshot in time, Mish, you're right. This time does look different because the inversion, we're at 396 versus about 416. So about 18 basis points. You're right. We're almost virtually right back within four points of where we were in the inversion before. Now, let's say we continue on our current rate of uninversion, maybe not the last 2 days, but we continue to uninvert. Right now, the market is saying by March, 74% chance of a 25 basis point rate cut, and even a 5.2% chance of a 50 basis point rate cut. So combined, you got 80% likelihood here almost of a rate cut in March. Well, the 2 may uninvert the 10 right about the same time that the Fed lowers. So maybe this time isn't different. Maybe this is exactly the same scenario playing out, that the Fed is going to lower the short end right as the 2 crosses the 10. And then that starts that clock within 6 months. And that's like right around election time. Will they, with a capital T, let that happen? Can they, with a capital T, prevent that from happening? I don't know. They can delay it maybe, but they can't prevent it. So that's amazing, by the way, after a 3.4% inflation print, which I think was wrong, by the way. I think CPI should be lower right now. I think the rent is sending a false inflationary signal. But despite that, the market is still dead set. I mean, almost unanimously that, yeah, in March they're going to go. I don't know if they're going to go in March, but right now the market seems convinced that they will.
Well, there's no blood in the streets, and there doesn't look like there's going to be blood in the streets. The only falling indication we have right now is CPI/PPI. Labor market, I got it. The numbers, whatever the numbers are, right? It's not showing a softening. It's actually showing a strengthening. So their dual mandate is one, get inflation down, and the other one is to, do maximum employment. They're at maximum employment, right? If you look, I know you hate Phillips, But Phillips's long-term employment number is 4.2%. We're sitting at 3.7. So by their own, theory, they're 0.5% ahead of full unemployment or full employment. So I just don't see it yet in lowering. I think it's going to be longer than people expect.
Unless there's something else that's driving them to lower commercial real estate that they're not telling us. Very possible. I mean, yeah, they love to talk about that dual mandate, but ultimately they're going to do what they have to do, whatever their puppet masters yank on their strings and tell them to do. That's what they're going to end up doing. And also, nitpick, there may not be blood on the streets, but there is poop on the streets. I don't know if there's any real estate euphemisms for when there's poop on the streets. What do you do with real estate? But I guess that's better than blood. I guess. I don't know. Okay. We're gonna get off of that subject real fast. Let's talk about this chart right here. Shout out to my buddy Chris Taylor over at Financial Prepper, who turned me onto this one earlier this week, and we actually just did a video on his channel about this chart today. Head over, say hi to Chris, tell him nobody sent you. This is the LEI, the Leading Economic Index, and admittedly, I was not at all familiar with this one when Chris called me up and said, "Let's talk about this." I had to familiarize myself with this, but I learned a lot. I wish I'd been following this one sooner. The LEI, or the Leading Economic Index, it's this composite index made up of all these other economic indicators into one giant index. That's shown here in blue, the year-over-year percent change in the Leading Economic Index. And then shown here in gray, that's the year-over-year percent change in real GDP. So the change in GDP adjusted for inflation, adjusted for government inflation. Now, the thing I would notice is every time we get these monster dips in the LEI, we head into a recession. Every time we get deep into negative territory, a recession follows. All right. And the LEI moves first and then GDP follows. Right. Look here, when the dot-com bubble burst, big move down in LEI. GDP was lagging until we got deep into negative territory. Wham, recession. It was a pretty big one. We stayed there for a while. And then the LEI actually started to collapse in 2005. It continued to head down, even though GDP was just barely creeping, still growing, but growing slower. And then it just falls off a cliff, and within a few quarters, GDP follows. We got something similar in 2018, 2019, right before repo madness hit. That's why a lot of people say, hey, there was some economic indicators that maybe you could have predicted the flu that came out. But the LEI started to fall, and then, of course, the vid happens, and wham, down we go. Of course, Fed turns on the money printer, floods the market with liquidity. It came right back up. But look where we are here. Look at what the LEI has done. All the way down here. Slam, all the way down. And yet GDP moving in the opposite direction. So which one is right? Which indicator is right? Is GDP, real GDP, right? Or is the LEI right? Well, I want to look a little bit at the LEI. By the way, thanks again, Easy Fix. Appreciate the super chat and support of the channel. I didn't realize I had that one up the whole time. It was probably blocking the bottom of the chart. But here is the index, what's made up of it. Now, I'm not going to go through every single data point here. I did that in Chris's video. If you want to learn more about all the different data points that make up this index, I recommend you check out that video over at Chris's channel. But this line here represents 0. If the bar goes to the left, it is negative. Some of these are deeply negative. If the bar goes to the right, it is barely positive. All right. Now, we have some numbers that are like 0.04% positive. They're essentially unchanged down here. But you'll notice every single indicator is negative, except one, the S&P 500 index of stock prices. Every single indicator is either flat or negative or deeply negative. One of them is positive, and it's stocks, which are at an all-time high. Again, I tell you, it's the best economy ever. Clearly, right? Clearly, soft landing stuck. Clearly, everybody's got it better. I mean, forget the fact that new order factories have been going down for the better part of a year. Forget the fact that the interest rate or the yield curve has been inverted for 2 years now. The yield curve has been inverted. Forget the fact that credit conditions are tightening and hours are being cut back and building permits are down and new orders, ex-aircraft are down. Stocks are up, so it's the best economy ever. You see it right there in the leading economic index. All right, now there's market just closed, so the week is over. Let's see what stocks did. We very rarely get it right at the close. So let's see. S&P ended up closing positive for the day. Number go up 2.5 points, 4782 for the S&P 500. Still just barely shy of that all-time high, but it was a good week for the S&P. The Dow, however, had a bad day, down 108 points or 0.29% lower, closing at 37,602. Also just barely shy of an all-time high. The NASDAQ was positive for the day, closing at 14,972. That's up 2.6 points. Still well shy of an all-time high in the NASDAQ. That's interesting. But stocks ended up having a really, really good week here, guys. Now, there's something I keep hearing a lot about that I want to talk about, and that's this one here, the Bank Term Funding Program. This is the new bank bailout that was rolled out in March, and everybody was fighting, especially on Twitter. Was it a bailout? Wasn't it a bailout, a QE or not? Forget about March and the bank crisis. That was the initial run-up. A lot of people are saying this big spike that's going on here, it's not really a spike. It's just up and to the right diagonal. Ever since the end of November, the banks have been going to the BTFP, and they have been borrowing money from the Fed. What gives? Why is this happening? Are more banks about to fail? I don't think so. I really don't think that's what's going on. What's happening here is, like all temporary government programs, it's been around for too long. It is no longer serving the function it was meant to serve, and it's just turned into a pig trough for rich people. And, well, that's what the BTFP is doing now. Now, here, this was banks accessing the liquidity they needed to survive, to slow down the bank runs, but that's not what this is. What this is banks getting free money that the government is giving them. And when I say the government, I mean the Federal Reserve. And let me show you what I'm talking about here. This is from the Federal Reserve's website, fedreservediscountwindow.com, or I'm not going to spell out the thing, but this is the Federal Reserve's interest rates at the discount window. And all the way down here at the bottom, there is the Bank Term Funding Program, where you can borrow money for 4.81%. Now, remember, you have to post a U.S. Treasury as collateral, but you can borrow the par value, basically the value at maturity of that bond, not the current market value of the bond. So they let you borrow more than the asset is worth, and they're charging you 4.81% interest on that borrowing. Now, the reason why this number keeps going up is not that the banks are desperate for this cash. It's because of this. This chart is the interest rate on reserve balances, or IORB. This is if a bank takes money and they deposit it at the Fed, the Federal Reserve will pay them 5.4% interest. So remember, if you can go to the Fed and you can borrow at 4.81% interest, and then you can take that same money and hand it right back to the Fed, and they're going to pay you 5.4% interest, well, you have got yourself an arbitrage opportunity of 0.59%, 59 basis points of 100% risk-free interest. It's free money. Why wouldn't the banks take it? And so one by one, the banks are realizing, guys, this is free money. Somebody offers it to you, take it. And so they're borrowing at the Bank Term Funding Program, and it's increasing. It's up to $147,175 million. And then they're just turning around and handing that money right back to the Federal Reserve. Now, the Federal Reserve is still operating at a loss. And so when the Fed pays that interest is printed money. They are adding money into circulation by paying that interest. And, 0.59% interest on $147.175 billion, that means the Fed is printing about $2.4 million a day in interest and just handing it to the banks for free. So the Bank Term Funding Program, it was meant to be a temporary stopgap to inject liquidity into the banking system to stop the bank runs. And now it's just turned into a pig trough where right now, it's not a lot of money by Federal Reserve standards, but it's just free money. It's inflationary. It's being printed into existence and handed off to the banks, the people who probably need it the least. This is not what this program was meant for. They need to get rid of this thing. They need to stop it. It's coming up on its first birthday in March, and I hope they get rid of it. So What do you think? Should we keep going here? We're about 49. You know, we're going to do one more. We're going to do one more. It's Friday. I'm feeling froggy. We're going to keep going. Which one do we pick? Which one? Let's talk about this one. All right. This was not queued up in order, but this is a big one because trade is a big deal and everybody's talking about shipping and boats taking the long way. This one snuck up on us here Thursday in freightwaves.com, which, by the way, if you guys want to know what's going on in global trade and the world of logistics, FreightWaves is where it's at. This is a really good website. They're specialized for trade and logistics. So it'll be news here long before it's news in the mainstream press. Maersk to use freight rail to circumvent the Panama Canal amid a drought. Guys, the Panama Canal, unlike the Suez Canal, which is basically at sea level, the Panama Canal goes up and then it goes down. And they have to use this big system of locks to raise ships up and then let them back down. And right in the middle of the Panama Canal at a much higher elevation is this big lake. I forget the name of the lake, but that lake is low right now. There's a big drought in Panama. And so they are letting fewer ships traverse the Panama Canal right now because there's just not enough water. Every time you raise a ship up and lower it down using these locks, you consume millions of gallons of water, and this lake just can't keep up with it. And so they're raising the price. They're letting fewer ships go through the canal, and it's just getting more expensive. This is on top of everything going on in the Red Sea and the Suez Canal. So what's going on now? Maersk, besides taking the long way around Africa, they're also taking the train across Panama now. Large ship crossings through the canal have plunged in recent months. AP Moller Maersk has announced it will begin using a freight railroad to bypass the drought-stricken Panama Canal as low water levels have forced authorities to limit the number of large ships passing through. The shipping container giant said Wednesday its Oceania America's service, which normally uses cargo ships to transit the canal, will instead utilize the Panama Canal Railway, a 47-mile railroad running adjacent to the canal that connects the Atlantic and Pacific Oceans. Maersk's OC1 service connects Australia and New Zealand with ports in Philadelphia, Charleston, and South Carolina. So Maersk said vessels that use the Panama Canal will now use the land bridge, creating two separate rail loops, one for cargo headed to the Atlantic and another for the Pacific. Pacific vessels will turn at the port of Balboa in Panama, drop off their cargo heading for Latin America and North America, pick up cargo heading back to Australia and New Zealand, Maersk said. Atlantic vessels will turn ports at Panama's port of Manzanillo, dropping off cargo heading for Australia and New Zealand and picking up cargo heading for Latin and North America. So instead of the same ships going back and forth between Philly and New Zealand, you're going to have two different ships meeting in the middle, trading cargo with a railroad in between and then heading back. The low water levels in the Panama Canal are just complicating things. Now, like everything else, the offloading and reloading of ships, it costs money. The transit on the rail costs money. It's more expensive than moving it by ship. So this is one more thing that is going to aggravate global trade at a time when Houthi and the Blowfish are already doing the same thing over in the Red Sea. So there's a lot of things. Go ahead, Mitch.
I was going to say it's not going to get better anytime soon because it's a drought issue. It's kind of like Lake Mead, right? It's just the water's not there to fill it up as fast as they're losing it. So they cut back just to maintain water level. So if the drought keeps continuing, they're going to have to cut back more and more and more until it's just you can't use it anymore, right? It's no longer navigable. So it's getting close.
Yeah, and it has not let up. And guys, I would like to add, this is an inflationary force, right? Just like the thing going on in the Red Sea, this is driving up shipping cost. That shipping cost will ultimately be borne by consumers. Now, I don't know, this is probably not going to be enough to override disinflationary impulses like things going on in rental markets and elsewhere, but this is one of those things that is going to aggravate cost pressures, while there are certainly other things aggravating cost pressures. And it's also going to contribute to the sense of urgency around deglobalization, this economic divorce that's going on between East and West right now. Something like this is going to speed that up because, companies are already talking about nearshoring or friendshoring. And if they can't get their boats through the Panama Canal, they're going to say, well, maybe now's the time to build that factory somewhere a little closer. So, it's not just the Red Sea. And I got Jose Orozco who's saying, BTFP, cue the Zach Galifianakis hangover math. I know the one you're talking about when Zach was doing his Rain Man impression, heading down the escalator in Vegas, counting cards at the was it at the blackjack table? I don't know. Great movie. And you know what? I have been quoting The Hangover a lot lately because ever since I did the video about Steve Harrison and Stephen Reese Lewis, the fake CEO over at Hyperverse, everybody's been making Bangkok jokes from The Hangover 2. And so everybody keeps talking about Bangkok and Hangover 2. Now I've got Hangover 1. I haven't seen Hangover 3. Did they ever make Hangover 3? Or they're going to? I don't know. Maybe it's a good weekend to get a hangover and watch The Hangover. That's
so they had 3 Hangover movies, right? You have the original in Las Vegas, you have the one in Bangkok, and then you have the Get Back Together. And I never saw the third one.
Yeah, I haven't seen the third one either. The third one is usually the weak point in the trilogy. I'm just saying, guys. The third one usually sucks. Although Return of the Jedi, I liked it. I actually, as a kid, Return of the Jedi was my favorite. The space battles always did it for me. And ROTJ's got the best one. But thank you very much, Jose Orozco. I'm glad you got a kick out of the Zach Galifianakis math. Also, check out Between Two Ferns. Awkwardly funny. Zach Galifianakis has a little, is it YouTube or a podcast? I don't know where he posts them. I've seen them mostly on YouTube, but it's awkwardly funny. A lot of awkward silences. Anyways, guys, we have now been going the better part of 56 minutes. The week is over. The weekend is upon us. And Eugene, what are you doing? I'm just getting ready to sign off, Eugene. And he leaves a very nice super sticker. Says, I'm number 1. Thank you so much, Eugene. Appreciate that. That's an orange one, too. Thank you, sir. Appreciate the super chat, the support of the channel, and the big fat number 1 that's showing up there. Thank you, sir. Appreciate that very much. And guys, look, long story short, stocks, the economy, it's nothing new. They are not one and the same. But I would also add, guys, that stocks could keep going up. I think they need another bullish catalyst to keep going up from here. I don't know what that catalyst might be at this point, but they can go up. The market has stayed irrational for a very long time. It's still at or near all-time highs here. And yeah, it could go higher even as the economic situation gets worse. There's still money left in that reverse repo, hundreds of billions of dollars that could flood in, providing liquidity to pump this market higher. There's still hundreds of billions of dollars in Uncle Sam's checking account at the Treasury General account that they could pump into the economy to drive markets higher. So, yeah, it could go higher from here. But don't for a second believe what these people are saying that, oh, it's just bad economic vibes is your problem. What's the matter with you? Can't you tell how good you have it? That is clearly not the case. And, well, Mitch, you got anything you want to add, brother?
I was going to say the economy is good for a small portion of the people out there. I would say about a good 20% of America, the economy is good for. Everyone else is not doing so great. So it's in general, watch out for volatility. Make sure you have your good profit points and take them, because if you decide beforehand, you have a much better chance of actually doing it instead of doing it on a whim.
I agree 100% with the sentiment that it's good for a segment. I would challenge the 20%. I think it's even smaller than that. I think it's a lot smaller than that. I don't know, 20 out of 100 people are seeing more benefit from the rise in asset prices versus the cost of living. You might be close. You're probably closer than me. I'm thinking like 0.1%. So you're probably closer than my ballpark now that I'm thinking about it. But certainly the majority is not seeing the benefit from the asset bubble. And that is a shrinking middle class, guys. The cost of living rising as asset prices rise. But got a video coming out later this weekend. I'm going to be posting it tomorrow with my buddy Travis. All of you Gen Zers, all of you millennials who have not yet given up hope. All right. We're not talking about the doom spenders out there, because if you're watching this channel, chances are you're not a doom spender. There is a light at the end of the tunnel. We are going to see rents fall. And I got together with my buddy Travis and we looked at some stuff this weekend, or we did it yesterday, actually. Really good stuff coming out. Look for that one tomorrow morning. And as I always say, guys, hard times are coming, but they are not quite here yet. Mish has his finger up. Go ahead, Mish.
2 things real quick. 1, the light at the end of the tunnel is not a train. And 2, markets are not open Monday, so we will not be live on Monday morning.
What the heck is Monday? Is that
I think
MLK?
it's President's Day or something. Yeah.
It's probably MLK. Okay, markets close Monday. So I will see you guys Tuesday morning live, Saturday for the video with Travis. And let's get the music going here. Thank you very much, everybody, for the super chats. Thank you to my Patreon supporters for everything you guys do for the channel. You guys rock. Links down below to all that good stuff. Thank you to Mish and my Blue Wrenches for keeping things neat and tidy in the chat. Hi, Mom. Hi, Dad. I love you guys. Have an awesome weekend, everybody. Till next time, live small and dream big.